I'm going to give you an easy Forex and gold strategy that made me over $15,000 in 2 weeks. That also got me this M3 competition. Make sure you guys like, subscribe, comment, because I'm going to be dropping way more bangers, breaking down my strategy, live trades, so you don't want to miss it. All right, this is the strategy that helped me buy an M3 competition at just 19. And so to give you guys a quick story about my journey, I started at 15 years old trying just stocks. I learned you need a lot more money to be profitable and make a decent amount of money. Then I went to options, which was a terrible idea because I don't like how contracts work. They flip too fast. It was not profitable. And then I discovered Forex, and I used to hear Forex was a scam or it wasn't legit, but I actually gave it a shot, and it's been the most profitable style of trading for me. And so I've just obviously stuck with it. But with that journey, I've tried a bunch of different strategies. Some are overcomplicated, unnecessary. Some don't work as good. I dialed and perfected this strategy, which you will see here, that is actually very simple. So let me dive right into it. The strategy consists of 3 things. So the first one is flow of market. Make this bigger for you guys. Flow of the market. The second thing is expected price level. And the last thing is just the entry signal. All right, so this is the sequence I look at. I start with the flow of market. When I know the flow of market, I'll move into the respected price level if it's at one, and then I'll go into the entry signal. So what are these 3 things? Well, let me break down each of these 3 things. So I do want to say this is more of my swing trade style strategy. It works better for currency pairs and kind of long-term trading. My gold and NASDAQ strategy is a little different, which I can make another video, just comment down below. And so with that, we actually caught this banger trade in my VIP team where I trade live every single morning. And so this was a 5 risk to reward ratio trade. I caught this trade right here and 0 drawdown, and it just smacked TP like always in 20 minutes. So that was a beautiful trade, but I can make another video on kind of my gold strategy and my NASDAQ strategy in another video, but let me dive into kind of my long-term swing trading style. All right, so flow of market. What I do is I start on the weekly time frame, and all the flow of market is just what's the direction of the market. Okay, and it's actually a lot more simple than people make it out to be. So what I do is I start on the weekly time frame, and if I start from here, you could see this is obviously bullish. We're making higher highs, higher lows, but then boom, shift to structure. So if I pull this over here, you could see that we're no longer creating higher highs and higher lows, because if we were, it would be something like this. We would not break this or this, and we would continue making higher highs and higher lows. So the direction after this candlestick, which is also an engulfing candlestick, meaning there's a lot of volume and a lot of sellers showing a huge rejection. So with that, it shows me that we're no longer bullish anymore. And so with the flow of direction, I always want to play with the direction. So on the long-term time frame, always trade with direction. This is probably the most important part and such an easy fix. So keep this in mind here, but let's continue on with the analysis. So on the weekly, we have this, boom, again, shift to structure, we are bearish. So, okay, I know on the weekly time frame, we are bearish. Now I'm going to go down into the daily time frame. So the daily time frame, well, if I mark out the same thing, obviously we're bullish here. Boom. Here we have the shift to structure. So you can see if I move this here, we are now, this is a lower low and a lower high to then create the new lower low. You can see we just shifted structure. So it's a shift of structure. Now I know the daily is also bearish, right? So weekly, this is what you're going to mark out. The weekly is bearish. The daily is also bearish. So we have 2 high time frames in sync. Now, the last thing I'll do is the 4 hour, make sure that is in sync as well before I enter the trade. So 4 hour, you could see I would wait to about this right here, because you could see, what did we do? We were kind of consolidating, not really clear market structure, but right here, we broke through kind of the support level as well. We retested, and then that's the higher low to then have the lower low right there. So this would be the entry, and I'll break more down into that later. But if I add to this, we're gonna add the 4 hour, which is bearish. So I have 3 high time frames in sync, which high time frames give you the most confluence of where the overall direction wants to go. So if I have 3 time frames in sync telling me it's bearish, why would you ever look for buys? All I'm going to be focusing on is sells. So I'm going to wait for something where I could capture a sell opportunity. And I do this, where am I going to enter? Well, this is where I'm going to go to the second number, which is respected price level. Before I get into that, I do want to say, if 2 out of 3 of these time frames are in sync, then it is worth it for me. It makes sense. But like, let's say we have the weekly bearish and the 4 hour is bearish, but the daily is somehow bullish. I will still be inclined to take this position as long as number 2 and number 3 still add up. So that's something to note. As long as 2 out of 3 of these time frames are in sync, you're good to go. So now I'm going to be looking for sells. And now we're right here, okay? So now number 2. Number 2 again is respected price level. So what is a respected price level? Well, respected price level, if I go on the daily time frame, is a major price level that's either a support, resistance, and has at least 3 touches. So let me show you an example. I drew out this blue rectangle right here to show me it's my respected price level. So you can see we have 1, we have 2, we have a bunch of wicks as well, but 2, and we have 3 touches. So that to me is a valid respected price level. What do I look for at this level? Well, you can see when we're above this respected price level, it pushes. When we're above, push, 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 all these wicks, boom, big push. So what happens is when we break below, we're going to do the same thing, but just the opposite direction. So we broke below, we came back up, retested beautifully. What am I going to look for? Because we are now under, it's going to reject and go this way. So this is my respected price level, and this allows me to look at entering a position because we're at a respected price level, which either, again, if you're above, supports, or if you're below, rejects. And so to align this strategy, we have the time frames in sync, so I'm looking for sells, and now we have a respected price level that price is at. So you can see we're at this price level. Now I could be looking for my entries because we're also below, so that means I could be looking for sells following number 1, the flow of the market. So that's on the daily. You could do the respected price level on the weekly, daily, or the 4 hour. I like using the 4 hour and daily. And the last part is going to be entry signal. So now we know price is at the area where I'm going to be looking for actually entering. Now, how do I know when to enter? So that's going to be obviously the entry signal. Well, entry signal for the high time frames, I really like this EMA. I don't rely on the EMA. This is going to be the last thing I look at, but the EMA 50 is super, super good. And you can kind of see if I go back, usually if you're above this EMA, it acts as a support, support, support. And when you go and you break through below, boom, resistance. Same thing as this respected price level. When you're above, it pushes up. When you're below, it pushes down. So most of the times, it's a final confluence I like to look for, but you can see above, pushing, pushing, we broke through. Look where we're rejecting. And this is clear sign on the daily that we're now under the EMA. So that's a huge bonus for my entry signal. So now I'm going to be looking for entries. This is where I'll go into the 4 hour, and I'm going to simply wait for a break and retest or a shift of structure. So essentially following the first flow of market, all I would want is I see a heavy support line here I marked out. All right, it's somewhat of a respected price level. And so when we break through this, all I want to do is follow the trend, get in where it's a deal, which is not going to be the lower low. It's going to be when you get a little retracement, and now we're under this respected price level again. So we broke through a heavy support, and now we're just retesting it from below to then continue. So I know when I see this right here, when we're retesting this on the 4 hour, I'm not going to enter off the 4 hour. I'd rather still get an even better entry. And that's where I'll go to, usually the 15-minute. And so you can see how beautifully this was set up. This is when we retested here. The entry would literally be, if I move this closure of the candlestick. Why? Because this is the flow of the market again. This is why direction is arguably the most important part. You could see on the 15, we're still making higher highs and higher lows. I don't want to get in on that because it could still continue that direction. All I want to wait for is a shift of structure. And so where's the shift of structure? Boom, right there. So you can see we broke through this last lower high here. So we broke through, and that gives me enough confirmation. If you also check the time, that is 2 in the morning. So right before London, where that's a good session with volume about to kick in. So that is valid. If it was Asia, wouldn't be as valid, but London or New York plays a big role as well. So that is in sync. And this is also, if I go back to the weekly, it's called an engulfing candlestick. You can see this is an engulfing candlestick. We have a huge reaction and a lot of sellers. So same thing, but on a smaller time frame. We have the engulfing candlestick. Not only did we shift structure, but it's showing me there's a lot of sellers here. This is a valid price level that we are rejecting. And then also, if I look, we have the 50 EMA on the 15-minute time frame. That made us go below this EMA. So you could enter right off this engulfing candlestick because it's a shift of structure. Sometimes I like to get a little retest, but look, if you see here, you don't always get that retest on the smaller time frames. On the bigger time frames, I'll always wait for the retest because it saves you so much money in the long term. But for this, you sometimes miss it on play, so it's kind of up to you. And so where would you put your stop loss and take profit? Because that is a big important part as well. It would be above the last shift of structure area, which would be here, because if we come back into this area, we're just going to continue that flow direction. So that is, I would give a little bit of space above that. And take profit, I would be targeting these lows down here. So you could see it's a 2.21. If you extend it even a little further, pretty much a 3 risk to reward ratio. And so that's another thing. I would only take a trade for swing trades if it's a 2 or above risk to reward ratio, because I have to lose 2 in a row and I'm still even. So it just makes you a profitable trader. This has a pretty high win rate as well. And so combining that with a high risk to reward ratio makes you profitable long term. So beautiful example for CAD JPY. Now let me dive into 1 or 2 more examples. All right, the next example we're going to look at is the euro against the Australian dollar. And you can see it's the same concepts applied. And it's actually a very simple strategy, which is nice because it makes it easy to learn and get the hang of. But you can see here, we're obviously bullish, wouldn't touch it. But then here, we obviously shift the structure and we're clearly bearish. You could tell that is a market structure shift. That is the lower high to then make a lower low. So I know the number one, we have a bearish market direction. So now I'm going to be looking for sells. Number 2, is there a respected price level? Well, if I go back, we have 1, 2, almost 3, 4, 5 touches. So this is a very well-respected price level. And so when we are above, it pushes, and we are below, it pushes to the downside, and now we're approaching below. So I'm expecting sells to the downside. So now I have two things in sync. I have, again, the bearish direction where I'm looking for sells, and I have the respective price level that price is approaching underneath. So this aligns perfectly. Now I can start looking for my entry signal. So I'm gonna go down to the 4 hour, and beautiful. You can see I'm not gonna enter here because we're making higher highs, higher lows, higher high, boom. We broke through the higher highs and higher lows. If I drag this out again, it's such a simple concept. The last lower high is right here. We broke and closed underneath. So again, sometimes you get a little retest and continue, sometimes you don't. It's up to you how you want to do it. Again, this time we had a little retest, but not really. So I usually get in right away off the closure. And you could enter right there, but obviously I enter off the 15 minute. And so if I go to the 15 minute, there's the entry, and we shifted market structure on the 15 as well, so that works. We're under the 50 EMA, and you just let it ride. So the stop loss would be above this last lower high here, and give it a bit of room so you don't get stopped and then continued. But the take profit is going to be at this next major support level. If I drag that out here, we have 1, 2, 3. Yeah, I could have held this a lot longer, which happens, but still this was almost a 3-to-1 risk to reward ratio trade. So very profitable. And the reason I closed is because we were at a very heavy support level and I saw some slowdown here. So it's better to be safe and lock in some profits because I still hit almost a 3-to-1 risk to reward ratio. So it just shows you how powerful and simple this strategy is. And real quick, guys, make sure you guys follow my Instagram at LukeBNCO. Sometimes I do giveaways, I do trade recaps, and just hit a follow. Subscribe to the YouTube as well because I can make a bunch more videos for you guys. I have some cool challenges coming up that you don't want to miss. And make sure you guys comment down below if you want to see my gold and NASDAQ strategy for day trades and kind of scalp trades because it's a separate strategy. Similar, don't get me wrong, but I added and tweaked a bunch of things to perfect the day trading strategy as well. So, hope you guys enjoyed. Please subscribe, like, and follow my Instagram for more. And I will see you guys on the next one.